Investing in the stock market can occur losses, and there is no guarantee of future returns. Before investing, always seek the advice of a competent financial professional. Welcome to Profitable Strategies for Savvy Stock Market Investors with Toni Turner. Toni Turner is the best-selling author of A Beginner's Guide to Day Trading Online, A Beginner's Guide to Short-Term Trading, and Short-Term Trading in the New Stock Market. A stock market trader and investor with more than 14 years' experience, she's a popular educator and speaker at financial conferences and trading forums across the U.S. Toni has appeared on NBC, MSNBC, CNN, CNN-FN, and CNBC's Power Lunch. She's been interviewed on dozens of radio programs and featured in CBS MarketWatch.com, Fortune Magazine, and Bloomberg Personal Finance. Learning how to invest in today's financial arenas can appear as an overwhelming challenge. Toni is known for her unique ability to explain the sometimes complex workings of the stock market to traders and investors in a way that makes it accessible and easy to understand. In this session, she'll offer 3 basic approaches to investing in the stock market, along with additional strategies for investing success designed to minimize losses and maximize gains. And now, please join Toni Turner and learn profitable strategies for savvy stock market investors.
Hi, I'm Toni Turner. Today we're going to talk about profitable strategies for today's savvy stock market investor. If you'd like to view this presentation on the internet in PDF format, all you need to do is go to www.toniturner.com/investor. There are lots and lots of benefits to investing in today's stock market. Investing wisely has proven to be one of the most lucrative ways that you can increase your wealth. When you choose wisely, when you choose with care, your stocks can make you money while you're out on your boat, while you're enjoying life, while you're working, spending time doing other things. There are many different styles of investing, one for every personality, one for every lifestyle. You can get into volatile stocks. You can get into stocks that move quickly. You can get into stocks that move slowly. Whatever your personality is, whatever your lifestyle is, you can find a stock that will benefit you and your investment needs. It's very, very important to take control of your own financial future. You know, I was in a cab a few months ago in New York City. I was going to a trading expo, and I saw a billboard on the side of the street. It said, "Spend quality time with your money." And I thought, wow, what a cool thing to say. How often do we think of that? We spend quality time improving our homes, quality time improving our companies, quality time hopefully with our families. And then a lot of times we take one of our most important, one of our most precious assets, we give it to a stranger, and we hope it will grow from there. We need to invest positive energy into our financial future. During the next few minutes, we're going to talk about 3 approaches to investment success, 3 different aspects of the market that you're going to want to look at before you invest in a stock. We're going to learn how to evaluate the stock market environment. It's not that difficult to do. You can access the resources right in your own home. Next, you're going to learn how to evaluate your target company's fundamental data. Now, this kind of sounds complicated to a lot of people, and it can be a lot of work. If you don't have time to do it like that, it's okay. I'm going to show you some ways that you can evaluate a company's fundamental data, and it's important to do so, taking some shortcuts, what I call fundamental one-a-day vitamins. You can access the information quickly, easily, and it can be from very high resources. Finally, we're going to learn how to evaluate your target stock's health right now on a simple price chart. This is called technical analysis, and although a lot of people think, wow, that sounds really difficult to me, again, I'm going to show you a simple way to tackle technical analysis so you can see where a stock's been, where it is right now, and where it might be going in the future. Let's evaluate the stock market environment. Let's look at different ways to evaluate if we're in a bull or a bear market. How do we find out, as busy as we are, where the economic markets are, where the financial markets are today? How do we know? Let's take some vital things into consideration here. Everything in our universe, whether it's the planets, whether it's the seasons, whether it's the tides, whether it's crops, even we ourselves as human beings, everything moves in cycles. The financial markets are mainly dictated by interest rates. And what are interest rates? They sound complicated. Interest rates are merely the cost of money. Interest rates is how much it costs you to borrow a chunk of money for a given time and then pay it back to the person who lent it to you. The cost of money is one of the biggest economic factors there are in moving economic markets. When interest rates go up, it costs more to borrow money, and that impacts a company's bottom line. When interest rates move down, obviously it doesn't cost as much money to borrow money. The stock market generally runs in about 3 to 6 months ahead of the business cycle. There are two cycles, the business cycle and the stock market cycle. The stock market cycle runs about 3 to 6 months ahead of the business cycle. This is where sector rotation comes in. This is where you see oil moving up, airlines moving down, drug companies moving up, maybe basic materials are running up. It's not that hard, and it's kind of easy to do, but it's important when you get into the stock market to focus on the sectors and the industry groups that are in favor in the current market environment right now. And you say, well, Toni, what if I buy in a group that's favorable right now and it isn't in the future? It's okay, because you don't want to get into an industry group or sector that's moving against you right now so that you have to make the money up that you've lost from it moving down in the beginning. We're going to look at sectors and industry groups that target the market, and I'm going to show you how to target leading stocks and leading industry in the current market environment. There are two basic types of analysis, fundamental analysis and technical analysis. We use these two different kinds of analysis and combine the information in order to make a decision as to whether or not we want to invest in a company's stock. When we look at a company's fundamentals, we're looking at such data as price to earnings ratios, earnings per share, market share, what share of the market does this company have, and an overall view, return on equity, return on investment. We also may want to look at such things as what kind of new products does the company have coming through the pipeline, what kinds of new services do they have coming through the pipeline. This is very important to get an overall view of a company's bottom line. The other kind of analysis that's used quite a bit and that's coming more and more into favor is the analysis that traders use. I myself am a trader as well as an investor, and I like to look at a picture very, very quickly, very, very fast, of where a company's or a stock's price has been relative to where it is right now in the current market environment. The price history that you can see on a chart during a given time period gives you a tremendous amount of information, and many times quite a bit of predictive power to see where it may go in the future. This is how we tell where bull and bear markets are. This is how we tell how far a company has been. Maybe it's just starting into an upward momentum pattern. Maybe it's come down in a downtrend, based out, and is starting up now again. It's very important to know, like with anything else in your world, where a stock price has been, where it is now, which gives you predictive value in knowing where it may go in the future. Before you buy a stock, you'll want to evaluate your target company's fundamental data. These resources will tell you which ones are strong right now, which ones are weak. That in turn leads you to look at the stocks or the components within these industry groups, and the rankings will help you evaluate which stocks you want to get into right now that have future growth ahead. It sounds like a complicated thing to do, but I'm going to show you some ways to make it easy. I'm going to show you some resources you can go to in order to evaluate a company's data quickly and easily. You know, when we go to Macy's to buy a red blouse, if we only have a certain amount of time, it's not wise of us to spend our time looking at blue blouses or brown blouses. We only want a red blouse. This is kind of the same thing. We only look at the stocks, we only look at the industry groups that can benefit us right now, that make really wise investments and that will carry that momentum into the future. So don't look at blue blouses if you only want a red blouse, because that's wasting time. That's not effective, that's not efficient. You don't want to spend all your time, you don't want to spend all of your time researching stock fundamentals. We have more to look at here that you need to spend a little time on too. Companies that rank stocks according to highest to lowest rankings are companies like Investors Business Daily. Investors Business Daily is great because it has a number of rankings or ratings right next to the Smart Select Composite rating. The rankings go from 100 to 1. So possibly if you're looking for a stock to buy, you'd like to buy a stock with a ranking of 60 or 70 or higher. That makes sense to me. Morningstar is also a very good resource, and they have a great ranking system. They rank stocks with stars from 5 to 1, 5 being the highest ranking, 1 being the lowest ranking. The final ranking system that we're looking at here is ValueLine. You can go to valueline.com. ValueLine ranks stocks from 1 to 5, 1 being the highest rank and 5 being the lowest. Ultimately, these three resources will streamline your research. They will help you be efficient and effective when you're researching your target stock's fundamental information. And in today's hectic world, that's a very valuable asset to have. And certainly other large newspapers and financial newspapers also give you information about current industry groups that are doing well, that are in bullish modes right now. Sectors are like technology. Sectors are like healthcare. Those are sectors. Within those sectors, there are industry groups such as pharmaceuticals, such as medical equipment, such as biotechnology stocks. These kinds of resources will give you information as to whether these particular industry groups are right now in uptrends, are strong, are weak, where are they in the positioning of the bull or bear market that you're experiencing, that we're in. Once you find the industry groups that are strong, and maybe it's transportation, transportation being a sector, maybe it's airlines, maybe it's trucking, but these resources will tell you which ones are strong right now, which ones are weak. That in turn leads you to look at the stocks or the components within these industry groups, and the rankings will help you evaluate which stocks you want to get into right now that have future growth ahead. Technical analysis is the study of historical price patterns over a given period of time. As you're going to see on the screen right here, we have a weekly line chart of ExxonMobil. The ticker symbol for ExxonMobil Corporation is XOM. The data on this chart was plotted from October 2003 to October 2005. Now, a line chart is just that. It takes into consideration the closing prices of every single week from October 2003, in this case, to October 2005, and it draws a line, just one simple line, from the closing prices each Friday night of ExxonMobil Corporation. Line charts are easy to read. You don't have to look at bars. You don't have to look at other different technologies such as candlesticks. The line alone can tell you, is the price going up, is the price going down, or is the price going sideways? As you can see with ExxonMobil right here, this stock was trading, and the price for the stock is in the right-hand column. If you look left, all the way to the left axis, you'll see that Exxon was trading right around in the $38 area in October of 2003. Since then, Exxon has moved higher and higher, and we all know what's happened to oil stocks. It made quite a high in March, up near the 64 area, and now it's trading back in the 58 area. You'll notice that it made a steady uptrend. Now, we call an uptrend a series of higher highs and higher lows. And you'll notice that Exxon made a very wise investment from 2003, even now, all the way up to the right-hand side of this chart. Think now, what would happen? Is Exxon going to pull back here? Is it going to go lower for years to come? We don't know. But wouldn't it have been really, really wise to buy shares of ExxonMobil back at the end of 2003 and held it possibly to the first of 2005 or even right now? A chart is a simple picture. It's worth 1,000 words, and when you combine technical analysis with fundamental analysis, you get a very, very clear picture, again, of where a stock or a company's been and where it might want to go. There are different kinds of charts. The chart on your screen represents the same chart as a line chart in bar chart format. Each tiny little vertical line represents 1 week. The small, tiny horizontal lines perpendicular on the left are the opening price, and on the right are the closing price. On this chart, we've added an indicator known as a 30-week moving average. We've added this for a reason. Remember back we were talking about fundamental data. We talked about ranking or rating our stocks, and we talked about wanting to invest in stocks that had rankings or ratings of, say, 70 and above or 60 and above. Now we're establishing criteria on charts that we're going to add as another decision support tool. And when we get all these decisions together and funnel them all down, we're finally going to arrive at a buy signal or an ignore signal. And in some cases, as our investment matures, we're going to use it as a sell signal or a take profit signal. Let's go back to this chart. We're going to use the 30-week moving average again as a guideline for buying and selling our stock. First, we're going to go to the market environment. We're going to ascertain whether it's a bull or bear market. We're going to focus in on sectors, technology, healthcare, financial sectors. We're going to look further into those, and with the resources we used before, we're going to find industry groups that we like. Maybe it's banking, maybe it's pharmaceuticals, maybe it's biotechnology stocks or software stocks, or in this case, an oil or oil services stock. Now we're going to move down to our target stock. We looked at the line chart, we've seen where Exxon has been, and we've looked. Now we can look at this bar chart and see if we had bought Exxon back in the last part of 2003, and we could have done it with this price chart had we had access to it at that time. If we bought back in 2003, when Exxon rose, look at November here, look at November, look at the end down on the left side of the chart. If we had bought Exxon when it rose and made 1 or 2 closes above the rising 30-week moving average and held on to it as long as it traded above the rising 30-week moving average, if we had done that and held on to it until it made 1 or 2 closes below the 30-week moving average, we would have made quite a good profit. How can we refine these decisions? How can we get them even closer? Look down at the chart and you say, well, Toni, what if I bought Exxon at 38? And what if it turned around back in November of 2003? And what if it rolled over or pulled back or retraced, and as we call it in the market? What if it just fell down to 28? I would have lost a lot of money. This is where your insurance comes in. Again, we put insurance on our homes. We put insurance on our automobiles. We certainly insure our health. Let's never, never again, let's vow to never again enter the stock market without putting insurance on our investments. That way, if a stock pulls back or it loses value, we get, as we say, stopped out immediately. We can put them in automatically. Now the market's going to do it for you. You can enter a stop loss order with your broker, and you can be at work or at play, anywhere in the world, and with that automatic order is entered, the market will take you out automatically. How are we going to place our stop loss? There are many different ways of doing it, but a really good way for an investment strategy is to once you enter a stock, immediately put a protective stop loss order, again, enter it with your broker, from 7 to 8% of the purchase price, whatever you bought the stock for. Put that order in right immediately after you buy the stock, and that's your insurance. That will take you out. We'll talk about this just a little bit more in just a minute. Here's another example of how we can use price charts and 30-week moving averages as decision support tools to enter a stock and make profits and keep safe. This chart is a price chart of Johnson & Johnson, the big pharmaceutical company. Notice how Johnson & Johnson bottomed out, as we say in the markets, at the end of 2003 and started moving up and moved up all the way through the middle of 2005. Wouldn't it have been great if we'd gotten into this stock back then and ridden it all the way up to $70? Looking at this price chart, you can see how if we had bought Johnson & Johnson when it moved over its 30-week moving average back in the beginning part of 2004 and then stayed in this stock until the first few months of 2005, we would have made a good profit.